Hello and welcome to Zak's Traders Cafe. Today I'm joined by Dan Betts, who's CEO at Hummingbird Resources. How are you today, Dan?
Hi, Zach. Good to speak to you again. Thanks for having me on.
Well, Dan, thank you for coming on the show. I'm sure that you're very busy out there in the field, digging and doing whatever you do out there and prospecting and producing, I suppose. I thought it'd be a good time to catch up for an updated interview, given the negative few weeks. The last few weeks have been very negative in AIM stocks. I think AIM index down 35% last week, and we're holding our breath to see what it's going to do this week. And Hummingbird being caught up in this negative cycle, despite their second producing gold mine on time and on budget. First gold for this earlier this year, and you're still in the ramp up mode. It's still in the ramp up mode. But recently, you finalized a group financing as well. So you've done almost all the things that people are expecting from other companies, and they're way behind you. I suppose the first thing is to talk about the interim results, which came out last week. Maybe you could just run us through that, and then we can go into the nitty gritty of the topics I mentioned.
Yeah, sure. Thanks, Zach. And I think obviously it's important to stress the point you just made. We're sort of out there busy doing things, and there is an awful lot of things going on. I mean, obviously, bringing a second mine on stream is no small feat, but at the same time, we're still operating Yamfilila, going underground there, and all sorts of other initiatives going on across the group. So it's good to have the opportunity to talk those through and hopefully clarify a few things with your listeners. But in terms of the interims, yeah, if I'm honest, Zach, I thought they were quite good. I mean, I've been surprised by the reaction in the market. I think I can understand to a degree why, and I think there's a bit of macro in there as well. But to summarize them, we did 51,000 ounces in H1. That was done at an AISC of $1,170 an ounce, and as a result, we produced EBITDA for the first half of the year of $33 million. Important to stress that's all from the Yamfilila mine, which last year was loss making. So I think it's been a turnaround that we should be rightfully proud of in Hummingbird, and it's really done exactly what we set out to do this year, which was to deliver as per our plans. We're now sitting here in October. We've got the wet season behind us. We've got Q3 results coming out soon, and I think Yamfilila is continuing to deliver as per our expectations. If I can just spend a little bit of time speculating, I suppose, why I think the market reacted negatively to the interims. Interims are a backward-looking set of results. It's all been released previously anyway. And I think the market is looking forward at, well, if you had such a good H1 and your guidance is 80 to 90,000 ounces, then you're obviously going to have an absolutely catastrophic H2, and we'd better sell and run for the hills. That's not the case, Zach. I mean, we are well on line to reach top end of guidance, if not hopefully beat guidance, which we've never been in a position before like that. Obviously, once bitten, twice shy. Things go wrong. There's the wet season ahead. Well, there was when we entered into Q3, we had to manage the wet season, which largely we've now done, and we were always anticipating a slower Q3. So we now have that behind us, and hopefully we can, with more confidence, start to communicate that we are well on track to deliver on our promises or better for 2023. I think also Kouroussa coming on stream, pouring first gold at the end of Q2 on time and on budget, is a monumental achievement set against the background of many coups and difficult political backdrop in West Africa, COVID, inflation, all these other issues that, if you look around the world at developers, most people have not managed to fund projects, let alone to bring them in on time and on budget. That said, I understand that the market is looking at, well, now you've turned it on, surely there's a stream of gold, and where's all the free cash? And it's just, people just need a little bit of patience. These things are complicated projects to bring on stream, and we've always said it's a 6 months ramp up, and we anticipate being at full scale production by the end of the year to have a full year in 2024 of full scale production at nameplate capacity at Kouroussa. and we are still on track to do that. I mean, we would all love to turn a mine on and the next day it's running at full capacity and producing lots of gold. But the reality is it's difficult. It's a complicated system you're turning on, and we have had challenges in the ramp up. Whether they are getting our mining fleet to move the volumes that we need to be moved to meet nameplate in that side, or getting we've had issues with community relations in terms of recruitment process and educating the community how many jobs are available. People always want more. You've got to be very, very meticulous in your recruitment process to ensure local content and all of these issues are conformed to. These are all processes that take time to smooth out. And sitting here today, start of October, I think we're in really good shape. And I think these challenges are totally standard in ramping up a mine. So whilst I see people, I guess they look at those interims and they're stressed that, are we going to run out of money, or are we going to ramp up the project, or is this really going to work? I think Hummingbird's in great shape. I mean, we now have 2 mines. We're de-risked from just like being dependent on one operation, and assuming, and I understand it's a big assumption and you have to deliver to be believed, but assuming we hit our ramp up and mine plans for 2024, Hummingbird's going to be, I'm not sure if we're going to be the biggest gold producer on AIM, but we'll certainly be one of them. And in terms of free cash flow, which is obviously the focus, deleveraging in 2024, and the value opportunity, and from here, I just think is, I think it's phenomenal, really. Hope that answers your question.
It answers many questions. I think it's probably not a very helpful exercise to try and work out why the market's reacted to you, whether it's positive or negative in the markets at the moment. But maybe there's a bit of detail that you could run through. It's always the F word, which is financing, or in this case, R word, because it's refinancing. That is one aspect. And then the relationship with Coris Bank, which I think the market hasn't really grasped. And I think if it knew that, the strength of that relationship and how helpful that entity is, it might move the dial in terms of sentiment or understanding.
So when we financed Carusa, the term of the loan, there was a repayment holiday that I think ended in Q4 this year, and due to ramping up and making sure that we've got enough time to generate the free cash necessary, it was prudent to refinance that repayment schedule with Coris, to push it back 6 months, so that we can be absolutely sure we've got the free cash flow to not be stressed, or as stressed as we would have been otherwise, and make sure we can meet those repayments. They've been totally supportive in doing that. It's obviously a complicated thing to do and took a while to do. And I think when people see you refinancing, they probably worry and they say, oh my God, what's going wrong here? But I think it's just prudent management of your balance sheet and your cash flow. And the relationship with Coris has always been totally supportive. We funded Yanfalila through that relationship. I'd like to call it a partnership. We paid them back everything on time. We've funded Carusa largely through a loan from Coris Bank, and we have a very, very happy relationship with them. I mean, I think the fact they're an African bank and they understand the issues, and whether they're geopolitical or supply chain or community issues, or having an African bank that understands those issues as our partner, is of massive value for us as a company. And obviously CIG as an investment group, same relationship goes, as our strategic cornerstone shareholder, as an African group, they understand the issues we have, and they're totally supportive of what we are trying to do. And what we're trying to do, Zak, is to build a best-in-class, diversified gold mining business. And we've done that from the grassroots, and we've now built 2 mines on time and on budget. Our growth profile in terms of ounces and free cash flow is, over the next 18 months, pretty impressive, I think. And we have this great relationship with a strategic shareholder and our investment banker, our debt provider, to support us on that journey. So, I'm excited about where this can lead.
So to reiterate maybe the point I was trying to vocalize earlier on, investors who are looking for a junior miner, which is has all this backing. It's there's more than one asset, and it's way down the curve in terms of ramping up, etc., etc. Don't actually have many choices in the London market at the moment.
Well, that's right. And if we have not finalized our 2024 budgets and mine plans, so even if I wanted to give you numbers, I couldn't at this stage, looking that far forward. But as a thumbs up, Zach, just to sort of give a sense of the scale, and bear in mind it's 2024 in 1 quarter's time. The Hummingbird Group should be doing over 200,000 ounces of gold at an AISC in the region of, let's just say 1,250, 1,300. I'll probably get eviscerated by the finance team for giving any numbers, but that's obviously what we're targeting. You'll have to take your own view on the gold price, but that's a lot of that's a big engine that's producing a lot of cash, and our ability to deleverage in terms of the debt profile during 2024 as a result will be very aggressive. And 12 months from now, we will be, touch wood, in a very different place.
So is there already on the horizon, let's say the market's really fussy about debt and funding and refinancing, can you envisage or even guess when the debt will basically be paid off or delivered in terms of you getting on the right side of it?
Oh, well, it will be during 2024 and obviously into 2025. But we will start making aggressive, substantial debt repayments next year during 2024. And I think another thing in those interims that maybe, some of the feedback I've had is, well, you've taken on extra debt. In terms of gross debt, there's an extra $20 million of gross debt in that refinancing package. And the reason for that is to make sure we do not get constrained in terms of developing the underground at Yamfilila, and making sure we don't get caught short on fleet and issues around delivery, because time is the enemy. You need to make sure you deliver on all your plans.
Yeah, and I think we've probably seen that with the Horizonte example, that the worst thing is to say that you're funded and then find out, actually, hang on, chaps, we're not fully funded, or we're not as funded as we're going to be, or we need to get new funding. So it's better to have probably more funding than you think you might need, or at least a comfortable margin, and then not have to go cap in hand to whatever party. But
yeah, look, I honestly, I can't comment on the Horizonte situation, Zach, and I feel for the guys. It's a very difficult industry we are operating in, so I hope they work it out there. But I would just stress that we are a totally different phase of we're not scoping and building a project. We've built 2 projects. We own and operate 2 producing gold mines, and any cash constraint for us is a cash flow issue, which we have resolved by the refinancing of these loans. So there isn't a blowout. It's not possible because we've built the mine. We've done it.
Well, on that, that's a happy note. But are there any other points that you feel that people, maybe to settle nerves, etc., the gold price, the economic lay of the land, Africa, your geopolitical situation where you are, any other potential jitters you just want to talk about?
Oh, Zach, look, we could go on all day. I think anyone investing in Hummingbird needs to understand we operate in West Africa. It's a fragile and difficult geopolitical framework at the moment. There have obviously been well publicized disruptions across the region, and that has risk. It has risk in terms of your every area you operate. But that said, you are discounted in the market for that risk at a rate that I think is possibly excessive. I think the opportunity at some point outweighs the risk, and that's for each individual investor to work out what that is. But we have been there a while now, Zach. We I think have had our trials and tribulations. We have certainly learned a lot along the way about those risks, and I think we're better equipped than we ever have been to manage them and sustain operations through them. And certainly the strategy has always been to grow, to diversify that risk. If you have just one mine in one jurisdiction, something goes wrong, as we have experienced, and some of our long-suffering shareholders have experienced with us, but we've survived it and we have overcome it, and we are definitely in a better position now to go forward. So I think for us, it's just heads down to ramp up and deliver in 2024.
I suppose you'd rather be where you are now in October 2023 than where you were at the beginning of the year with all the progress made, even though the share price is the same as it was at the beginning of the year before all the progress was made.
Well, 100%, Zach. I mean, we're in a very different place operationally, so that's all good.
Well, we'll see how things develop. In the meantime, Dan Betts, CEO at Hummingbird Resources, thank you very much indeed.
Thanks a lot, Zach. Thanks for your time.